S&P 500 futures opened this session much lower. It seems the recession stagflation narrative is gaining some traction. We come into the early morning and knowing that bourses across Europe are all down 1 to 1.75%. It seems like carryover with regards to the ECB, and Reuters report this morning that the ECB is going to cap bond spreads between countries and buying Italian, Spanish, Portuguese, and Greek bonds with profits made from maturing bonds from Germany, France, and also Dutch from the PEP program. Also, the inflationary talk that's spilling over into the U.S. Even Lagarde said, and I'm paraphrasing, that we're not going back to the old days of low inflation, and ECB basically said we're not going to see low inflation anytime soon. That said, we get into the bulk of our session. We had actually some data that maybe reinforced the recession to a lot of people. Smaller than expected rise in personal spending in the month of May, and also slower than expected rise in core PCE deflator. On the other hand, initial claims came out just about where expected, and the Chicago PMI plumbed down to a 1.75 year low. With that said, the S&P futures did attempt to make a comeback mid to late session, and seeing some of the winners spread out. Energy seemed to be the biggest winner, at least energy services, and on the losing side, cruise stocks, also some names in the travel industry. Going into options, the volatility is higher today. At the money is based up a little bit. What's important to recognize is that skew, or the 35 delta area on the put side, up a little bit more than the at the money vol, and beyond that you see the tail, or the 10 to 15 put area, up significantly relative to the at the money. The options volume very spread out today, getting into quarter end, and traders are just looking to square away before the long holiday weekend.